what's going on, traders? Todd Gordon here with New Age Wealth Advisors and founder of tradinganalysis.com. Hope you guys are well. I wanted to do a video on Docusign. I was supposed to do CNBC today. I had 3 stocks to talk about. It was going to be Docusign. It was going to be, what else? Kroger and Restoration Hardware. But 30 seconds before I got on, they got in my ear and they said, the Queen passed away, you're bummed. And that's the second most, I think, most, I would say, significant bumping that I've ever got on TV. My first was President Obama's first speech in office. Yep, I'm that old. Anyways, Docusign, I wanted to talk about this stock. It's interesting. It's gotten absolutely slaughtered. Beautiful move up here in 18, 19 into 20 with the pandemic, and then from 330 all the way down to 50 where the stock originally broke out. So, is it a pandemic stock? Is that, is completely being revalued? Is it a, is it a Zoom? Is it a Peloton? Is it all the other high-flying stocks? Then I think there's 2 answers to it. I think in the short term, no. I think the stock will have a bounce back. Reported earnings tonight. We'll talk about that quickly. But I think longer term could be some issues, some big issues threatening the heart of the business and really what they do. So let's talk about it. So, in the short term right now, earnings were solid. Okay, they were expected to make 42 cents. They made 44 cents. Revenues expecting 602 million. They made 622 million. So very good earnings report. We can go and I can show you the after hours report here. Show extended, and there we go. So there's a 1-hour chart. Stock was down here into the mid 50s. And traded up pretty well here after hours. And, as I was at the chart before, we can see that this is the last fib support level. So those are the fib ratios we look at. So the last fib support, then if you look at the momentum indicator down here, the strongest rate of change and downside momentum was back here in March. And you can see that we've made higher lows there as we moved into support. So is it surprising that the stock has rebounded? Not all that much. As I said, I think I'm hopeful in the short to medium term, but I'm doubtful in the long run. Okay, so actually, let me go back, and it goes back to this December report. Okay, that was 2 earnings reports ago, December 22 of 21, I should say. Huge miss. The CEO put a very disappointing outlook out there, saying billings outlook are going to be significantly lower, as he says, as they return to more normal buying patterns post-pandemic. So the stock has had obviously a tough go, and it's very cheap from a valuation point of view right now. It's trading in 2023. They're expected to make $1.68 total over the 4 quarters per share, and if you divide that into the stock price, that gives you a forward earnings ratio of 33. So forward PE, excuse me, been a long day. So 33 is the forward PE. If you look at the price to sales, right? So you take revenue, you divide it by the amount of shares outstanding. You call it 5. They're trading right now. Price to sales of 5. Forward is 4.5. And I think if you take like a Microsoft or something, it's like 8 or 9, right? So it wouldn't be crazy to get stocks around a 10, 15 price to sales. So stock from a valuation perspective is pretty cheap. And you know, there are asset managers out there. I looked at a couple. I saw Ken Fisher owns $300 million worth, and there's some other ones out there that hold the stock and have been accumulating the stock. It's saying that, you know, this isn't a simply work from home stock. We're not going back to, you know, the return to the office is not going to spell the end of Docusign. You know, everyone's getting rid of these wet ink, you know, signature. You take a piece of paper and sign it with a pen. You know, I think that's a pretty obvious statement. So, you know, there are asset managers who are buying Docusign. I don't hold it in my wealth management business, and I can understand the initial catalyst to say, okay, you know, I think Docusign might get a move up. It's not just a pure pandemic stay-at-home stock. You know, the digitalization of our economy certainly makes room for Docusign, and it's got a very compelling valuation right now. But my problem is, as I was researching for the segment today, you know, I started thinking to myself, the very nature of their business is to send a contract from one party to the other digitally, sign it, have it returned back to that other party, and who's the third party intermediary that consummates or I would say brokerages or that relationship. It's Docusign, right? So they're what they call a trusted third party, and I'm saying, you know, isn't that very much the heart of what blockchain is going to be in the Ethereum network? And we're going to talk about crypto here in a little bit. Ethereum is showing some really good relative strength to Bitcoin here, but I tell you guys, I've been doing a deep dive into Web 3.0 and what blockchain can do for us, and Ethereum network, and where the Ethereum network wants to go. And I really started to dive deeply into Docusign. I probably spent about 6 hours researching Docusign today, and I couldn't find very much in terms of them making good moves or plans to embrace blockchain. And I'm going to arrive at the point that it might actually cannibalize their own business. Okay, and if you think about it, like, you know, contracts as they stand now, large commercial legal contracts, you know, between banks and you know, huge mergers and acquisitions and whatever. You know, they're tracked by companies with very, very expensive software. You know, and only, from what I read, 10-15% of those large dollar contracts are being housed and protected on very large, expensive computer servers. 90%, 80%, 70% of the contracts that are exchanged back and forth are not being tracked digitally. They're not verified. There's no sort of assurance to one or the other parties that they're protected. So, you know, there's a lot of untapped market right there. And as I said, you know, they've talked about, they tried to strike a deal with Visa in 2015. They bought this company, Pure Contract, back in 2020. I think they closed in December of 20. They haven't done much with it, right? So, you know, they've tried to do it, but it feels like, from the lack of knowledge, and I could be wrong, I'm not positive on this one, but I did a deep dive and I couldn't find anything, even in an earnings report tonight, that they are making strides to move into it. And I think, you know, it's going to threaten their very nature, right? So the one thing I did find, which is interesting, they do use blockchain, and the company, I had a screenshot of it somewhere. Anyways, that's right. It's not really important. There's a screenshot on Docusign website. It says, we do embrace blockchain technology, so our customers of blockchain, and they have, you know, huge amounts of customers, and some very, very big dollar companies who pay on average, let's say $300,000 to Docusign. I custody with Charles Schwab, and I know Charles Schwab is using Docusign. So when I bring a client on to my wealth management business, they use Docusign or some form of it to get their docs into Schwab. But what they're saying is, customers are able to pay Docusign to be customers of Docusign. They're using the exchange they're using blockchain to do that contract exchange where I don't see that as a good thing, because let's say Charles Schwab is paying Docusign for their services. Well, if the blockchain comes around and you're able to transact, do a secure transaction and eliminate a lot of the big dollar overhead costs, why should a company like Charles Schwab, and I'm not saying, I don't know the specifics of the Charles Schwab relationship, let's say it's, I don't know, whoever, just let's pick XYZ company. XYZ company could submit and exchange their contracts via the blockchain with Docusign, but they're still paying a significant amount of fee for that ability to transact on blockchain, which, as this builds out in the future, the need for that large overhead, I think, is not going to be there. I think you're going to be able to transact small and large contracts securely on blockchain for no cost, for very, very little cost. So I don't see how Docusign, unless they really evolve and embrace this technology, how they're going to overcome that. And again, I don't know, but and I think I don't think the stock has been beaten down because it's a post-pandemic play. All these asset managers that I'm reading in 13Fs who are acquiring the stock are saying, well, we are now of the opinion that it's not a post-pandemic software as service casualty stock. Docusign's here to stay. Well, duh. I mean, obviously, right? Like, I just, like, of course. Like, I think that's unless people are putting money to work and they know they're going to be able to monetize in the blockchain economy, maybe there's something that I'm not reading why people are buying it, but I think it's kind of a foolish thesis. So Docusign did try to embrace blockchain back in. They said something in December 2020, and they said basically it's intriguing, but it's still too expensive for the kind of things our company does. Ethereum network is trying to, obviously improve the technology to make it more cost effective and handle quicker, larger transactions, and that will come. But if you think about it, when we get there, the Ethereum, and they have smart contracts on there on the blockchain. They're public, they're impregnable, they're fully traceable. They can offer accountability for both parties who are delivering a contract. If you and I were to go into a contract via the blockchain will have the ability for let's say me to put up collateral that is out of my account, sort of an escrow, and if I don't deliver on my side, you get my collateral. And it's in the public blockchain. It's not just between, it's not just housed, it's some independent third party company that's monitoring that relationship. It's very, very intriguing. So I really wonder how a company longer term like Docusign is going to make it. So I kind of wonder if this significant underperformance that I'm talking about here could be this realization starting to come through the market, not just like a Peloton and a Zoom and all the other pandemic stocks that got hammered. Okay, so I think. And here's the trade I was going to put out there today. I was supposed to be on like 1 o'clock today. The stock, shorter term, I think people are coming into the stock. I think it can get a little bit of a run. I'm time frame is everything, right? I in the next my next segment here, we'll talk about the next 6 to 12 months. I'm talking 3 to 5 years. I'm not so sure. Right, so I was going to say 65 is a good upside target here. Looks like we got there right after earnings. So we came out right about here. We're up to 72. Looks like the breakout here is going to be, just above these old highs, mid 70s, and there's going to be a lot of shorts here, and we could get a pretty good move up. So I might even, oh shoot, sorry, let me show you the chart. I might even show you that right here. Here's the chart. Get a move up to the 77, 78 area, and I might even, try to play it a little bit, because I do think there's a lot of people coming into the realization that, it's not a pandemic stock. The earnings were solid tonight. It is here to stay. It's not, it wasn't just a Peloton stock, which I still may think might come back, but not come back, but find some footing. But longer term, I think the company might have real issues. So curious to hear what you think on that one. Let me know. I am literally asking you, what do you guys think? Have you seen signs that Docusign is going to be able to adapt longer term in the age of blockchain and smart contracts and Ethereum, or whatever form it might be? So I thought it was interesting. All right, let me know what you think. Hope that helps. I'll be doing a lot more of these videos. I've been away from social media for a good 2 years. It's time to come back. All right, I'll leave it there. Have a good night.